All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and it's getting worse, my friend. I am talking about the bonds. They keep going higher on the yields, but now coming into Friday, it is about to be crazy because it's going to be the moment of truth. We're going to find out, do the bonds find any sort of rally tomorrow? Do they stay the same? Or coming into Friday, once again, near the 360 lows, do we watch the bond market sell off further? I'm telling you, this is going to be a wild one. It has already been crazy, and there was a lot of other stuff. You had like Liz Truss. I'm going to start with this pretty picture, and then I got a stock market one. But Liz Truss, we've been talking about the pound. She has literally resigned today, and it was the shortest prime minister in history of England. Like, it's crazy. Like, this is what I'm trying to, like, here. There's, like, George Fanning is her competitor. He lasted, like, just over, like, 50 days or 100 days. Bro, that's George Fanning. I looked for the competitors, and this came up, and then the other guy was this. Frederick Robert, are you kidding me? It's historic, chat. I did the Trump hands. I know. It's crazy. Forgive me. But let's get to a market pretty picture. And this is for the bulls and this is for the bears as well. Because right now, clearly that 360 level, we got money on it. But it is very important. But the thing people have been talking about, are we gonna rally or do we go lower? You're watching the market go up with earnings, but we just came down a lot and a lot of things are getting bad in the bonds and the currency. But are people really selling out, and is this truly going to be a bottom? So this chart is showing you the fund flows of the 100 biggest US ETFs over 60 days, and it's scaling it out over the years, and it's saying we have not had a 60-day stretch of people selling out of ETFs. That happened in 2020 or around 2019. It happened in 2018, happened in 2015, happened in 09, happened in 07, but it's not happening now. That's why I'm saying, depending on if you're bullish or bearish, you're going to interpret this as, well, okay, that means we have a lot more room to go and we're going to go lower, or it means that everybody's really bullish and wants to keep buying. But the point is, this is a tricky spot. So we have a lot to go over. We had earnings after the bell. Thank God Snapchat did not terrorize everybody else, but tomorrow will be a big day. There's a lot of money expiring. And then next week with the earnings, it's still gonna be crazy. And then Powell's right after that. So we got a lot to talk about. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. Oh, I did it perfectly. It's there. It's free 99. I'm telling you, you want institutional level news, information. We could get it fast. You got macro, even non-macro, futures, options. Even if I don't trade an option, you got a bunch of options and it's free. All we ask is for people who respect the markets and respect each other. That's it. That's us. The only cost. Oh man. So I hope you're ready. Tomorrow we got the butterfly, Chad. I hope you're ready for it. It's already gonna be crazy. So beast mode, free throw, run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, as far as your first key, today was a lot like yesterday. I'm telling you, from news flow to how the market moved, and then the ending culmination of the bonds still doing bad, screaming problem. All of that was the same today. Here is the daily chart. Yesterday is to the left. Obviously, to the right is today. But you'll notice the same little scoop and pop and come down. It looked exactly the same, but towards the end of the day, we didn't get that bounce, and then we closed below that Monday level we were talking about yesterday. So that's not good, but like I'm saying, for the news flow and everything else, it was very similar. We heard more stuff about Japan in the morning, heard a little bit about the Bank of England, again, even the pound and how all of that's moving. That's kind of been at the same spot. The yen did a lot worse, and we're going to talk about that here as we move through the keys, but overall, it was very similar to yesterday, and it was the the same exact thing. We're still a little higher. We're not back to those lows we were just at, kind of holding the gap up. But now the bonds are very, very bad. And that's what I mean. That is the thing that's getting worse. So that is key number one. Key number two, I'm sure you were on watch for it, baby. Snapchat. They managed to only clap themselves this time. And it's kind of impressive. But tomorrow we need to see. And if that fear spreads, that's going to be a problem. Otherwise, it'll be chill. Right now, futures are a little bit down. There was some news here after hours about more chip bans on like AI from China and stuff like that. But overall, like Google and Meta, they reacted to Snap. Like Meta had a 5% reaction, but overall, it wasn't the same level of carnage as the last time Snapchat has reported. Last time, all of the futures were dropping. It was really bad. So what we want to be on the lookout for tomorrow is how do these other earnings affect, especially with those tech stocks, because those are going to line up next week. But I'll tell you this, a lot of earnings this week were good, but today after the bell, nobody had a good one. There was like BJ's restaurant who did decent, but like it was kind of bad. So I want to see, but surprisingly, you didn't really get an after hours move, and even the futures right now, they're not really tripping out. So watch out for that. That is key number two. And then key number, I don't have number four, but because that's not the final one. Anyway, key number three, the Liz Truss news, man. It means that we got to be watching the pound and gilt. You saw the yen. I'm sure you heard about it today. It hit 150, and we talked about it. The reason why it's not flushing 150, it's a very interesting phenomenon. People are worried about intervention, and the Bank of Japan is trying to be quiet about intervening, and it's creating this like, is he going to do it? Should we do it? It's again, to back off the speculators, it is very important. But why I'm bringing this all up, you saw reactions to it. We've been watching it the last couple of weeks. It had a way more important effect, and now you're getting the earnings kind of diluting it, but we're bringing this back to the bonds here. The biggest difference is that now our bonds are really, really getting clapped, while those situations are either the same or getting worse. What I'm trying to tell you is that interest rates are like 0.5% or 1% higher on U.S. bonds than last time the pound was even at this, before or when all of this was starting. That's kind of stayed at the same level. Our situation deteriorated. The Japanese yen, he keeps getting worse, and it was fine. He was already getting worse ahead of everybody, but now with the yen at this level, our bonds have also moved in a bad direction. So remember, right when that yen news came out a couple months ago, even the YCS, those plays are killing it, all of that. But it's like we talked about this and said a big risk of Japan. And then now you throw in the UK into it, it would have an impact on our bond market. Now, we talked about this yesterday. Even today, I feel the same way. I don't know why the bond market keeps selling off with this level of velocity. It's one thing if it kept selling off. It's another thing to keep selling off this fast, this large. But we don't know why, because there's both earnings, the UK, the yen. We don't know who's doing what. But now after earnings, a lot of bank stocks sell bonds and do a lot of stuff. So we're still trying to figure that out. But overall now, all of these situations we've been dealing with, they're still in play, still at the levels, if not worse. But now you have the bond market screaming way more than it was any other week. And that's why for Friday and the final key, man, watch the levels tomorrow and let's see how this plays out. Like I said, I don't know why the bonds are going down, which I'm saying you may have a chance it goes up. I have zero certainty in it, but the whole point is if tomorrow's an awful day for the bonds, that is going to be a giant signal after the whole week, and then especially if the market catches up with it. But if we do get a little bit of relief, that will be good. But now what I want you to keep in mind, no matter what, we've done this 3 times if we do it tomorrow. It's already been twice. We've gamed to 360, gapped up Monday and Tuesday, and then by Friday, you're back at 358 or 360. Then we gapped up. If we close at 360 this time, it'll be the 3rd time in a row. So keep this all in mind with how it's moved. But I want you to look ahead and think. People are still going to want earnings on Monday as long as the world doesn't implode on Saturday or Sunday. AKA, as long as the UK, the yen, or the bonds don't get materially worse, no matter where we close. If we do fluctuate and break the low 350s, then all bets are off. But if we kind of hold 360, 358, then I want you to keep earnings in mind for next week. So I hope you're ready, but Let us get into the plays. So, right off the bat, we made a couple of plays today. I actually really like how I'm holding, and we brought up the butterfly yesterday. It's holding $5,100 profit. I'm down about like $2,000 on the ES, so it's a little higher than yesterday, not much, but I was up to $6,000 at the high of today. But now tomorrow, it's the moment of truth, man. If we go lower, technically, I'm gonna be in the money, or I should be in the money right now, or just outside on the 365s, but it's going to be an interesting one. But now, as far as the other plays, don't let me get distracted because I got distracted yesterday. Play number one, baby. I made this play after hours. I've talked about it. I went back and forth a couple of times and we did good, but Meta, simply the drop after hours, Snapchat, it brought it down 4% Meta on a candle. And I said, okay, that's already really big. So I decided to scoop some up, but it all depends on the fear tomorrow. That's what we're going to see. I even made an option trade on this one today. I grabbed a weekly for tomorrow, 138 call. I was hoping that it would end up being a good earnings. I was up 100%. Then it came down. We're probably going to get clapped tomorrow. But I did buy 25 shares, not 50, not 100, kept it smaller after hours at like 127.78. But my whole idea is I want to see this fear. I don't think Snap was bad enough, or that effect in its spread to hit Meta. Like I'm saying, as long as we don't implode, I think some people are going to want that. And honestly, I like the sandbag plays like I've been bringing up. So I like it, but Snap even shows if somebody did bad, they still might kind of do bad. It's not always going to be a sandbag, so you still are going to have to pay that price. But I like Meta. I'm not going to hold it for earnings, but the idea is now scoop some up, and then hopefully we can ride it out and sell it out before. So that is play number one. Play number two, baby. I really like this one. I may even do an option on it tomorrow. All depends on the market, but AT&T, watch the Verizon earnings in the morning, but I think a lot of people slept on this one this morning because they had a mini sandbag, and that way if it continues tomorrow, it doesn't move big. There might be like cheap 1 penny options. I may like it, but the whole thing is AT&T, they did really good. And last quarter, they were like, oh my gosh, consumers aren't paying their bills. Oh, the inflation. And now they're like, we killed it. Netflix. Okay, you know, so it was a little mini sandbag. They were up like 9% at one point. I don't know where they closed, but gonna be watching that, pair it up with Verizon earnings. Should be a good one. That is play number two. And then finally, baby, play number three, Disney. I still like Netflix. We came down on it. It did pretty good though until we kind of sold off, but I like how Disney's holding. Disney, they are not below that Monday level now, so I'm thinking it's good. They're still gonna have the earnings depending on the vibe tomorrow and how it plays out. I may consider adding more as I'm still holding those. So those were the main plays. As far as everything else, let's get to the trades that we made today. Please don't crucify me. I'm not your savior, so I wouldn't even have a positive effect, but I shorted Tesla in the morning, 25 shares at 205.90. Again, I've been playing it really small on Tesla with only like 10, 20 shares. It works. We've actually hit the last like 3 or 4 moves on it, but I thought I'd go for it. If it breaks 25, it's squeezed. I was down like 180, and I think it kind of came back to the level that we're at, but opened up that trade, then DFIN. I really liked it, but I just have so many upside plays now with the ES and the butterfly and then all the different stocks that I bought. But I was like, DFIN, have profit in a weird way, even though it's related to that drama and any tension. That's why I feel bad selling it, because it's like I want that exposure. But also, DFIN just popped because of LMT earnings. So let's see if we could come back to it. But I took $200 profit. Then I did an MNQ. I only made $12 on that. That was the peach flip. I held it for like, what, an hour or so? Not anything too crazy. And then I opened up another MNQ that I'm holding now. I'm down like 90 or 100 something dollars. Then that Meta there after hours, 11 minutes after the bell. But those were the main trades. As far as what we are holding now, pretty much the same thing. But there you see on the parent, still down 1,300. It's been fluctuating. I really want to close it out because I want to see. I was thinking Liz Truss leaving was going to be bullish, but the fact that it's not, it's like it's tempting me to stay in the play and try to get a little bit more, but I'm like, I don't know, because now we got a little less volatility, but it does depend on what happens. But still riding out that one. The ES, again, I'm down 3,000 on the long ES, and then I have a, what, $800 loss, I think, on the option. But this is going to be the showdown for tomorrow. I was up on it, even like almost $1,000 in the morning. I could have took profit on the ES, but again, if I was up 1,000 on the ES, I was actually, the butterfly only went down to like $2,000 profit. So again, using those to balance out, but my max return really, really grows tomorrow. But still still holding that. The MNQ, I'm down 200, not 100. I guess it dropped here on that futures opening. That wasn't good, but holding that one still. Then the MYM, that's the downside from before. Then Google, I went down after hours, but I was up on that during the day. There's the Meta shares. Then the Netflix, I'm down 366. I'm waiting on that one again, pairing that up with Disney, and I'm down like 50 bucks on the Disney now on those 50 shares. And then my Nvidia, that one's up like 100 or 200 bucks. It was up 400, and then holding out the rest of everything, getting slaughtered on the QG and all the UNG. But again, my plan with it, I may chill out a little bit just because I think everyone has so many questions on it and it's there, but really maybe to even highlight just X-axis like we said. But calm down on that. We're going to see what happens. There was a natural gas report, but again, the market's been wacky, so we will see how it is. But as far as tomorrow, watching that butterfly, watching the futures, if we can maneuver around anything with earnings, that'll be it. Buy a little of the dip, maybe, and then we'll see what happens. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, respect is what will get you through all of this. Oh, yes, this ain't even personal. If you can't respect people, that's one thing. You do you, boo-boo. But I'm telling you right now, if you respect the financial markets, you respect the leverage, you know how to handle things. Nothing is good or bad at this moment. Options, shares, leverage. It's hard to say good or bad, but you need to approach whatever it is with respect. Be prepared to face a difficult opponent, and you will succeed. And I know that I know some of you hear this and it's going through like it's smooth. It's like butter, but like, you know, when it butters, but it's butter into the upside. You get it. You get it. I pray if you don't get it, but let's go, baby. You need to be focused, need to be in the game. We've already imagine how many watch lists, even tomorrow, to do all of this. Oh man. So you need the endurance. You got to stay in the game. But if you have respect, it's not going to tire you out. Trust me. Respect it. Stay in the game. Stay focused and show it. Put in the work, baby. But you're already there and you're made for it. So let's go. Let's bring it to the end of the year. Let's bring the energy in the morning. And God bless you, Chad, and all my positive people. Let's get in. Shout out to Lawn Turbo. Stop playing with me. You ready? You ready, bro? I'm excited. I didn't mean to do that. Like, I wasn't trying. I was just hyped, but like, I just like, what's up, son? What's up? Okay, I'm sorry. It's the uncle. You know, this get... Okay, I love you, man. God bless you. Thank you for the positivity. I hope y'all been hitting them after hour philos. If you know, stop playing with me. I love you.